Good morning, and welcome to episode 241 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, September 10th, 2025. Israel bombed Hamas leaders in Qatar overnight. This was a unilateral action. Prime Minister Benjamin Netanyahu did not consult the U.S. before taking the strike. President Trump has spoken with Prime Minister Netanyahu and leaders in Qatar and has assured Qatar that there will be no further such actions as we continue to try to find a way to broker a peace in the region. Japan has agreed to a $550 billion investment in the U.S. Solely at President Trump's discretion as to what those funds will be invested in, and they have agreed to this as a way to avoid tariffs in the future. French Prime Minister Francois Bayrou was ousted by a no confidence vote of their parliament. As the fourth prime minister in a very short period of time to be sent packing, if you will. Macron has selected Sébastien Lecornu as the replacement to Bayrou. Here at home, employment numbers have been revised downward by 911,000 jobs. These are ghost jobs that never did appear, and the statistics were clearly inflated. This follows 800,000 jobs that were similarly written off or revised downward last year, bringing the total to near 1.8 million ghost jobs amid these weak and suspect figures coming out of the Labor Department. Consumer credit has taken a big jump from July to August. Consumer credit in the U.S. was $9.8 billion in July, and it's $16 billion in August. That's almost a doubling, and it suggests that the American consumer continues to be tapped out, looking at credit cards to pay for staples and things they need and necessities on a regular basis. This all amidst a weaker dollar, which continues the longer-term weakening trend. You'll see in the numbers in a second, the dollar's down considerably. It wasn't just about a year and a half ago that we were at 116 on the U.S. dollar index. We're firmly below 100 at this point. So let's take a look at the numbers. Gold and silver both have been surging. So gold is up 3.2% over the past week to 3,653.50. It was 3,540.30 last week. Silver's up 0.8% after a bit of profit taking the day before. It trades at 41.23 an ounce. It was $40.91 last week. Platinum down 0.6% to $1,403 an ounce. It was $14.12 an ounce last week. And palladium's up 2.4% to $1,188 an ounce. It was $11.60 an ounce last week. With gold outperforming silver to the upside this past week, it's going to take more ounces of silver to buy that ounce of gold. So your gold-silver ratio has ticked up to 88.61. It was 86.54 last week. And as I mentioned, the dollar continues to weaken. It was 98.36 last week. We've dipped down to 97.83 this week. So gold and silver continue to surge. Gold has set several new all-time highs, record highs over the past week. Silver's setting 14-year highs over the past week. The world is embracing gold and they're shedding dollars. So just over the past year, we've seen that gold surpassed the euro in terms of the number two place in terms of currency reserves for central banks. Just this past week, gold has surpassed U.S. Treasuries as well as the currency of choice, if you will, for your currency reserves. This has not been the case since 1996. The bottom line is dollars are being mismanaged. We have dysfunction in D.C. We are continuing to overspend. Therefore, the money supply will be expanded. The world sees this. Central banks see this, and they're taking action. This is not austere or fiscally sound policy. And as a result, gold is moving to the forefront, dollars are moving to the back seat. Anybody that's interested, there's our friend at the Mises Institute have this incredible offer. A random donor has donated 100,000 books, Hayek for the 21st century. They're giving them away in order to educate the populace as to sound money, Austrian School of Economics principles. Just follow the link below this video and you'll be able to go ahead and get a free copy of Hayek for the 21st century from our good friends at the Mises Institute. As always, we'd like you to go ahead and follow us here on the YouTube channel, subscribe, like us, send us your comments and questions, subscribe to our social media, take our once monthly newsletter and our twice weekly alerts. But in the end, don't ever forget, getting rich starts with keeping what's yours.